Hey guys, today we're going to be talking about negative growth rate and negative EPS. I know when you take a negative times a negative, it becomes a positive. But when you're talking about businesses and companies that have negative growth rates or negative income, how does that even become a positive thing, right? Stay with me with this one. So one of my previous videos, the 10-year forecast of these particular stocks, which I will link up here as well. I had GameStop in a situation where the EPS was negative and the growth rate was negative. So obviously when I had a formula that had to take the two values together, I was getting a positive price and it did not reflect what it should have been because the current value of it is $148 as of today. This might have been a little different from the day when I actually filmed or recorded the last video, but at the sticker price, it's coming out to $231, which makes totally no sense whatsoever because everything is in the negative. So which leads me to this particular article that I found really interesting and very helpful. I know it's dated back in 2018, but the information in these few pages has enlightened me to the point of no return. I looked everywhere. Someone actually helped me out with this and they sent it over to me because I was questioning. I was like, how do you calculate a negative growth rate and a negative EPSs for it to become a positive number? Obviously, it does not make any sense. So this article was very straight to the point and it made total sense. You had $100. It grows to $125. That's easy to calculate, right? Because now you're $25 more than what you started off with, which was $100. So you're up 25% from $100. So that grows it up to $125. Simple math is when it's positive and positive. Let's go look at the second one, and I'm going through it, fairly quickly because this wasn't meant to be a long video. How's a positive and a negative growth rate gets confusion? Because, and we'll go through the article itself and then the question that was asked. The answer to your problem is 100% growth. You have to think of it in terms of algebra. You need to multiply negative 25 by negative 1 converting the negative 25 to a positive 25, and then subtracting the 50 and divide it by 25. The equation looks like this. Think of it this way. Negative 25 to 0 is 25, and 0 to 50 is another 25. Hence, you arrive at 50 minus 25, or 100%. There was a little confusion as I was reading. I was like, so what is it? If you have a negative growth rate, and this example was really helpful to me. And if you guys are confused about how do you calculate negative growth rate or negative EPSs into your calculation, the short answer will come right at the end of this article, which is only a few minutes read into it. It's only a few pages. It's not a hell of a whole lot. But I want to show you this example. One last example. Say the company started at negative 1,000 and went to $50. So obviously negative 1,000 and then you started profiting, you started making money and you hit $50, right? So now you're in a positive. Would you look at this company as having really high percentage of return, or did it just dig itself out of a hole in the negative and got itself back into the positive? You can't look at the company as, oh, this company is doing really great now because it obviously turned a profit this year, even though it's $50. But let's just say it was 50 million. Prior to that, let's just say they were $1 trillion in debt, but they brought themselves back up to 5 million or 50 million. Did that mean the company is doing well, or did it just happen to just pay off its debt because for whatever reason? You wouldn't look at it as growth, because if you looked at the current state of where it's in the positive, yes, it makes sense. They're a good company. But if you took in consideration what happened prior, maybe management change, or maybe, certain things happened, or there was a lawsuit, but they lost money. They lost money in order to get into that position of being in debt. So that's what this particular example was trying to point out. And obviously I will link this article in the description. It helped me tremendously. And if anyone's stuck in this position as I was, trying to calculate the formulas, because I was taking from this chart where the formula was from Invested, the book itself, and I was trying to figure out how does a negative and a negative work. This is where it made the total sense. Going from a negative would not be real growth, only an improvement in earnings. As you said, going from a positive earning value would be true growth. I'm wondering then if negative earnings can even fit into the overall equation. A company is just outright having a bad year or two with negative earnings, and actual growth doesn't take place until earning becomes positive. I guess if a company has a string of negative EPS, an investor will have to decide how he wants to handle the shares. Hold and hope things turn around and the company once again is showing growth, or sell before the rest of the market realizes what's going on. Here he says that is correct. This guy gets it, and hopefully after reading this post you do too. It's very important to accurately identify when a company has negative growth or positive growth. Also equally important to not reward companies who had major losses the year before. So he's saying that just because the current year the company may be doing well, but if it came out of a hole, don't count that as percentages of increases of doing well. It's realistically is you have to start taking into consideration the fact that it's doing well and how long they can hold that on for. Let's just say they were debt in 1 year and they became positive, and then they come in debt another year, like the following year. You can't really calculate that. You would need to start looking deeper into why they're going in debt. What is their cash flow, or why their balance sheet isn't balancing. So that's pretty much what it's saying here is if in fact you have a negative EPS, a negative growth rate, it is very hard to determine what is the price, a fair price for this particular company. And that's the situation that I ran into, and that was the problem that I had. Same goes for BlackBerry. BlackBerry had a negative EPS and a negative growth rate. Now, these are estimated future growth rates, so it's hard to determine what's going on, what situation. Maybe something is turning around. These prices, when I do the formula, they're not right. They're not correct. Even though the formula is asking to multiply these two values together, I'm getting a positive result, which shouldn't be, because the company is not making any money. It's not in the positive for two negatives to be a positive. Mathematically, yes, but in this situation, when you're analyzing a company for the value, the future value growth and how much it's worth, it doesn't work out that way. But when a company is doing positive, that becomes more realistic. Those are true numbers, right, going forward. But with a company doing negative, very hard to determine. You have to take in a lot of other factors to see if the company is worth investing in. That's pretty much what that article is stating. I want to thank you guys for being here again. Appreciate it. See you again soon. Bye.